Welcome. I've just tested this strategy for 100 times in a row, and it just happened to be one of the best I've ever tested, arguably the best, most profitable strategy I've shown on my channel. So really want to share this full strategy with you guys, break down all the rules, show you some examples, then get through all of the 100 back testing. I'll fast forward through that and then talk about all the results of that back test. This one is going to be combining trend direction with resets into overbought or oversold on stochastic K, and swing failure patterns, often untapped short-term swing high or low. So we're going to get into all of those rules. Just a quick shout out to my affiliate exchange before getting into everything. BitNex exchange is allowing all customers global and no KYC, no VPN needed. So those of you who can't use a lot of exchanges out there in geo-restricted locations, BitNex will allow you no VPN, no KYC crypto exchange here. So these guys have newcomer bonuses, rewards that you can collect as well. So check them out if you need a crypto exchange. Now, let's get into the breakdown of this strategy. So first, let's just cover the indicators that are being used here. So first, we have this yellow line, which is just the 50-period exponential moving average. And this is a 15-minute time frame that this strategy is being applied to and tested. So next indicator, stochastic RSI. This indicator is default settings as well, but I've gotten rid of the stochastic D line, kept the stochastic K, changed the color, made it thicker just for better visibility. So just the stochastic K, because that's all we're going to need to then see if our rules are met for this strategy. So if this stochastic K line goes overbought in a downtrend, we can then start looking for our next piece of criteria for an entry. And if we're in an uptrend and we go oversold on the stochastic K, we can start looking for our next piece of criteria for this strategy. Okay, so that's stochastic RSI. And then for the short-term swing highs and lows, which is what we're going to be looking for, untapped short-term swing highs and lows with a swing failure pattern off of them, that is marked by these green arrows. I'm using the Trade Pro Market Structure Indicator. You don't need an indicator to do this. I'll just explain what a short-term swing high is, what a short-term swing low is. So a short-term swing low is when you have a candle that has the left candle of it as a higher low candle, and then the candle to the right of that center candle is a higher low candle. So this is a short-term swing low, left and right, both higher than that center candle. Short-term swing high, as you see right here, we have a center candle with a high, then a lower high to the left and a lower high candle to the right. So that's a short-term swing high. This is a short-term swing low. So I'm using the Trade Pro Market Structure Indicator. If you do want the custom indicators that I offer, they're on my Patreon page if you're interested, but you don't need the indicator. You can just use the definition I just gave you. That's exactly what these green arrows are marking, is short-term swing highs and short-term swing lows. So that's all. That's it. So all you need to have is that 50 EMA, the stochastic RSI, and the short-term swing highs and lows. Just know what those are, because we're going to need to know about the short-term swing highs and lows when we look for our swing failure pattern. So that other piece to the entry trigger is a swing failure pattern, which we'll get into now. So first rule, as you can see, I've listed everything out here. We have the 50 EMA for the trend direction. Okay, so that yellow line. If price is trading below the 50 EMA, then we're going to be looking for stochastic RSI to go into the overbought territory. If the price is trading over the 50 EMA, then we're looking for our stochastic RSI to reset down into the oversold territory. Okay, and that's the 80 and the 20 level on the stochastic RSI at default settings. Okay, and so another rule that's important to note is that we're not allowed to have more than one candle close over or under the 50 EMA. And let me explain that with an example of a trade setup here. So this specific setup is a good one to look at because we actually came up to the 50 period EMA and we got one candle close over it. If we got two candle closes over it before getting our entry trigger, then it's no longer a valid pullback. We just have to wait until another setup, okay? So one candle close is allowed, but the next candle better make it back below if we're in a downtrend, or if we're in an uptrend, the next candle better make it back above the 50 EMA, or it's just an invalid pullback. We're not interested in trading it. So let's kind of go over some of the rules here. With a swing failure pattern. Actually, what is a swing failure pattern? Well, a swing failure is where we wick up to take out a level. So it could be the previous candle, could be a previous level that's untouched over here, but then we close back down below and we create a wick that wicks that level, and we reclaim, come back down. So this specific candle, the reason why this is a correct entry trigger for this strategy is because we are under 50 EMA, we pull back, right? We get a swing failure pattern here on this candle with no more than one close over the 50 EMA. So let's get our tool here. It's my drawing tool. So this candle, we get that swing failure off of these untapped swing highs. So that is one of the criteria is we need to have a swing failure pattern off of an untapped swing high. Okay, so this is a short-term swing high, short-term swing high. You can see the green arrows at those highs. This wick takes out both of those levels and is a swing failure pattern. So you can see we wick it, we wick both these levels, and then close back down below that 50 EMA, and that is a valid entry candle because this is a swing failure pattern, and we get that swing failure pattern with that overbought territory, stochastic K, which happens to be the same candle that gives us the swing failure pattern. So this is a valid entry trigger, okay? And so the setup here for the stop loss and the take profit, moving stop to break even, it's going to be like this. We go stop loss to the high of the swing failure pattern, and we target 1 to 2 risk to reward ratio, or if we get better than 1 to 2, targeting just the lows here, the lows or highs before the pullback began, then we're going to do that. But since this low here only gives us a 1 to 1.4, see we get a 1 to 1.14 risk to reward ratio there. We need to get at least 1 to 2, so we're going to be extending that out a little bit when the risk to reward isn't that great, just targeting the lows or highs, okay? So if we look at this next one, this one, we can just target the lows here because it gives us better than a 1 to 2 risk to reward ratio. Okay, so see, this setup gives us a better risk to reward ratio, targeting just the lows of this where the pullback began. Okay, so let's take a look at this setup. We get the pullback, right? We're under the 50 EMA, so we're looking for a short. And then we go overbought right here. So this candle, we're overbought. So then we mark that high. See that short-term swing high that forms here? We need to have this price come back up to that level. We're only taking entries off of new highs of the current pullback, okay? So we get a swing failure off of that high, but this one's a green candle, right? So if you looked at my rules, we have one more candle after that swing failure to confirm a red candle. Swing failure pattern must be a red candle in a downtrend and green candle in an uptrend with one more candle allowed to confirm this. Okay, so this is a great example as well for this rule. Notice how the entry that I have posted here is this red candle, the next one, not this green one. That's the reason is we need to have that red candle. We have one extra candle to then confirm a red candle. Otherwise, we just keep looking for a new setup. We would need a new swing failure off a higher place. But this one, we get that next candle is red candle. So it's a valid entry trigger. We go stop loss to the high of that swing failure pattern. Notice the swing failure, wicking that untapped swing high, short-term swing high. And then red candle in that next one, that's our entry trigger there. Obviously, we're overbought here. And that was also new highs within the context of this current pullback, which is another criteria. We need to have new highs on the setup here where we get the swing failure. It has to be off new highs or lows depending on trend direction. So we're going to target the low from where this pullback began. And that gives us a 1 to 3.76 risk to reward ratio. Now, the other rule is at 1 to 2 risk to reward ratio, we're going to go break even on our stop loss. So for this specific setup, we would go break even right here. On this candle, comes down to 1 to 2 risk to reward ratio. We just go break even there and continue to target our original profit target. All right. And something I need to mention as well for this setup, we would go break even on our stop loss at the lows of the pullback here. So this one, we would go break even right here and then continue targeting our 1 to 2. Okay. Now let's move on. Next setup. Okay, so we go overbought stochastic K right here, this candle. That candle put in a green candle swing failure, and it was at new highs, and it was a swing failure that took out an untapped short-term swing high on this green candle, right? So that's valid, but only if this was a red candle. So we need to see that next candle is a red candle. Luckily, that next candle also puts in a swing failure there and is a red candle, so that's a valid setup there. We're going to be targeting the lows of this current pullback. And the reason this is here is because this is where the pullback began. And then we only had wicks below it, so we didn't close back below. So technically we can move this down. So that's going to be the lowest point of the current pullback that we're trading. Targeting that for a 1 to 2.41 risk to reward ratio, stop loss to the swing failure pattern high. And then at 1 to 2 risk to reward ratio, we would go break even right there on this candle, but that candle also hit our profit target, so that's a good valid setup. Okay, so let's look at one here where the swing failure happens off of a previous level. So remember, it just needs to be an untapped short-term swing high or low. So here's one where it's not off of one of these intra pullback short-term swing highs, but it is off of a previous one from a previous little pullback over here. Okay, so we're going to wait until we go overbought stochastic K right here. So then at this point, we're looking for that swing failure pattern to form. So we get a big green candle here. There's no swing failure. We just take out this short-term swing high. So on close, which means we're no longer even interested in this short-term swing high. This one means nothing. So now we need to wait for another short-term swing high that's untapped to be swept with a swing failure. And that happens right here with this green candle. See how we take out this untapped short-term swing high over here. And then we put in a swing failure off of it. But we don't get a red candle yet. So next candle is going to be the entry. Right here, candle close, confirming that this is a valid entry signal and swing failure pattern off of that short-term swing high. So we enter, stop loss goes to the short-term swing high of this particular swing failure pattern, targeting the lows of the range because it gives us at least a 1 to 2. And then stop loss would go to break even right here for this particular setup. And in that same candle, it does hit the profit target. Okay. Here's another one. So I'm just going to go through just this one more example, and then we're going to go into some long positions so you guys can understand both sides of the trade. Excuse me. So this one, overbought right here on this candle. So where's the high of our current pullback? It's right over here. Pullback began over in this area. So that's going to be our target if we get a setup. So we need to see this high, the highest point of the current pullback with the short-term swing high, swept with a swing failure. So we get that swing failure here. We wick it. Next candle is a red one, also a swing failure. And then that is our trigger to go short, targeting the lows of the pullback because we got better than a 1 to 2. This is 1 to 3.87. By the way, over the course of the 100 back tests, the average risk to reward ratio of a winner was a 1 to 2.99. So about 1 to 3 risk to reward ratio was the average over a series of 100 back tests. And so there it is. Hopefully it's making sense at this point. In this particular example, 1 to 2 risk to reward ratio, we go break even right here. So break even stop loss here. And we continue down. We don't get stopped out at break even. Continue down towards that profit target. So that is the setup there. So hopefully it's all making sense after a few examples. Let's go on to the next long setups here. So this one looks funky, but it met the criteria. This is a weird, really, really weird one. This one gets stopped out at break even, by the way, and let's explain it. So now we're over the 50 EMA. We did not get a setup here on this pullback. There was no valid trigger. So this particular one we did though. So why is this a valid buy setup? Even though it looks weird, I still counted it because it is valid for the rules that I listed. So I'm just, I'm counting every setup that meets the criteria for the strategy. Doesn't mean you needed to have taken this one after such a big candle that kind of put you at a bad entry, but it still was valid, so I counted it in my back test. So this one, what do we have here? We get the reset into oversold stochastic K right here on this candle. What's the low of our current pullback? Well, here's the high where our pullback begins. So that's going to be our initial target for stop loss to break even or profit, depending on the risk to reward ratio. This is the low of the current pullback here once we go oversold on our stochastic K. So we need to see at least that level swept before we can have an entry. We need to see a swing failure off of that level. Short-term swing low there. So we get that. Come down, swing failure off of that low to new lows of the current pullback. And then since it's a red candle that caused our swing failure, we need to have our next candle as a green one and still holding the swing failure. So we get that. We see a huge green candle, and ideally what this candle would have looked like is a small green candle. Then we get a great risk to reward ratio, but that's not how it worked out this time. This is a big green candle, and it's still a valid entry according to my rules and what I tested. So you can, avoid a setup like this if you just don't like the risk to reward ratio of it, but it's still valid. And what happens is, get the entry posted there, stop loss down to the low of the swing failure pattern, right? And then we're going to be targeting 1 to 2 risk to reward ratio. So it's way up here. Anyway, we go stop loss to break even in a setup like this at the highs before the pullback began. So right away we go stop loss to break even right here. It's kind of a silly setup, but I still counted it because it meets the criteria for the strategy. And then comes right back down, stops at break even. Okay, so it's a break even, that one. Now let's look at this next one. By the way, there were no other trades in between here. There were no valid setups since the last one I showed you in the downtrend. This one didn't give a valid signal. We got no valid signal. So this is the next valid signal, that the ones I'm showing you right now. This is the next valid signal here. So why is this one valid? Well, let's take a look. Here's the beginning of our pullback right here. The high, and then we wait until we go oversold stochastic, which happens right here. This is already at new lows of the pullback, but we close below all these short-term swing lows over here. So we need to wait for a new short-term swing low to form and then be swept. Okay, we need to still have that swing failure pattern off of a short-term swing low that's untapped. So we actually get that right here on this candle. See how we put in a new short-term swing low right here. We wick the 50 EMA, so the no close is below it yet. Bounce a little, and then we come back down, and then we put in a swing failure pattern here off of that untapped short-term swing low right here, okay? And since that's a red candle, it also closed below the 50 EMA. We need to have our next one be a green candle and close back over that 50 EMA because we can't have more than one close below the 50 EMA or it's an invalid setup. We have to wait for an entirely new pullback. So that is the setup. Valid, we close back above, green candle, swing failure off of an untapped short-term swing low, over sold here on our stochastic. Stop loss will go to the low of the swing failure pattern, targeting the highs from before the pullback began. There. Gives us a 1 to 5.2 risk to reward ratio, 1 to 5.18. We go stop loss to break even at 1 to 2 right there. Never comes back and gets taken out at break even. So it makes it all the way to that profit target. Okay. So that is the setup there. Those are some long setups. And so as you can see, all of the rules are being followed. This is exactly what I'm testing for the 100 back test. You can slow down the testing. It took me like 3 hours of back testing to do the 100 back tests because I wanted to make sure every single setup was accurate and that I was testing it properly. So 50 EMA for trend direction, only shorting below 50 EMA, allowing one close over or under the 50 EMA per pullback. Otherwise, it's an invalid pullback. We wait for an entirely new setup. And of course, only longing over the 50 EMA. Stochastic RSI key, overbought or oversold. Swing failure pattern off of a short-term swing low / high must be a new low or high of the current pullback. Okay, important. Notice how they're all at the highest or lowest points of the current pullback. That's a rule. You need to see that we have that swing failure pattern off of an untapped short-term swing high or low. That has to be a new low or high of the current pullback. Swing failure pattern must be a red candle in a downtrend and must be a green candle in an uptrend, with one more candle allowed to confirm this. Okay, so I explained that a few times. We have one extra candle to confirm a green or red candle depending on trend direction. Stop loss placed below or above the swing failure pattern. Profit target, new high or low of pullback. Or if the RR, the risk to reward ratio, is less than 1 to 2, when aiming for the new high or low, then we're just going to default to the 1 to 2 risk to reward ratio, as I showed you on a couple of the examples. Okay. So when the risk to reward ratio is not good, targeting the highs or lows before the pullback began, then we're just going to default to a 1 to 2. And then stop loss moves to break even at the high or low of the pullback, or at a 1 to 2 risk to reward ratio. Okay. So depending on what happens here with the risk to reward ratio, then it's going to kind of determine what happens with our break-even stop loss, as I went over with the scenarios, showing both types of scenarios in these examples. So hopefully it all makes sense. It's all fully rules-based, repeatable, and back-testable. So going to get into the 100 back tests. I'm going to fast forward through it. Feel free to slow down, do a 0.25 speed on YouTube if you want to watch each individual back test, but it would be 3 hours of recordings if I just put it all in at normal speed. So I'm going to do 100 times speed, put it in the video, and then you guys can see that I've done all the testing accurately. I spent time making sure I didn't miss any setups, that every single one met the criteria to a T. So time for that. Fast forward now. All right, here are the results. Let's cover it. I want to show you guys the sample of price data that I tested. So this is on a daily time frame, just to compress it all down into one screen. You can see it started over here where the range began, and then it ended right over here. So all 100 trades are in this range here, just so you guys can't say, hey, I only tested this super strong uptrend. I actually tested during this ranging period. So we got both lots of longs and shorts, and it's not biasing it to, oh, we had perfect trending conditions, that's why it works so well. Just so you guys, know what sample I tested it on. And you can see that, it was not the perfect trending environment the whole time. This had a lot of changing from uptrends to downtrends throughout this 100 backtesting period. So just so you guys can't say, oh, the results are so incredibly good because it was tested on a very strong trend. No, that's not the case. Tested just a range on the daily here. So let's cover the results here. This was tested on Bitcoin 15-minute time frame. Took 125 days of price data for the 100 trade setups. risk to reward ratio, as you guys know, was a variable and break even method with the 1 to 2. So, it's just a variable risk to reward ratio. Now, out of the 100, we had 45 winning trades, 17 break even trades, and 38 losing trades. Now, this is where it gets super impressive. The average winning trade is 2.99 R. So we have a risk to reward ratio of about 1 to 3. And when we lose, of course, we're only risking 1 R. So it's a 1% loss. If we're, doing risk of 1% per trade, not compounding, total gain on the account for the 100 trades is 96.67%, which makes this one of the best strategies I've ever tested, maybe the best if we're considering it only took 125 days of price data. So just 4 months or so, which makes this very impressive with these results. And so with such a good risk to reward ratio average and a good win rate, this is ridiculous. So super crazy results out of this one. It's definitely worth taking a look at, and even maybe modifying it, trying some other things out. I'm going to pop this on the strategy ranking spreadsheet, so we'll see how it compares to others that I have tested over time. Here it is on the strategy ranking spreadsheet. As we can see, it's the best strategy here, considering this one isn't really realistic. The number one spot holder that got 121.87% gain on the account took 11 years to do that. So with 125 days and nearly 100% gain on the account figure, this one is ridiculous, and the results are incredibly impressive. So I'd say this is the new best, highest profiting trading strategy that I have tested on the channel. So got it on the strategy ranking spreadsheet. I also recently tested another one that I made a video about maybe a month or two ago, and it's on my channel that was similar results to this, but this one, insanely impressive, really good results, and something to definitely think about and look into if you are trying to design a strategy that you can follow. So very promising. Thank you guys as always for watching. Hopefully you learned something, enjoyed the video. Make sure that if you don't have an exchange to trade crypto, you check out Bit2Next with my affiliate link in the description and pinned comment. They have new user bonuses here. No VPN, no KYC needed for this exchange. Also like and subscribe this video, subscribe to my YouTube channel if you haven't, and I'll continue always trying to find new, better strategies. Thank you very much.